Nvidia just reported another blowout earnings. Revenue for the second quarter came in at $13.5 billion, which was up 88% on the previous quarter, 100% up year over year, and 22% higher than company guidance. Gross margins increased more than 5 percentage points to over 70%, and net income tripled to $6.2 billion. And the company gave another impressive outlook. Revenue is expected to grow another 18 or 19% next quarter to $16 billion. Whatever way you look at it, this was another stunning report from the company, which, based on the latest share price, now has a market cap of $1.17 trillion. So what's the valuation? Based on the trailing 12-month revenue of $33 billion and earnings per share of $4.2, the stock now looks incredibly expensive at 36 times revenue and 113 times earnings. However, looking at those trailing metrics makes no sense because Nvidia is growing at a rate of knots. Based on company guidance, next quarter's earnings per share should come in around $3.30. So we're looking at roughly $6 earnings per share for the first half of the year, and that's already more than the trailing 12-month figure. And based on the current growth rate, earnings per share next year could increase to as much as $16. Account for stock-based compensation and we're looking at possibly $14 earnings per share next year. The current stock price is $472, so that means Nvidia is trading at roughly 34 times next year's earnings. That's not actually very expensive for a company that is growing this fast, and it's certainly not a bubble. And bear in mind that Nvidia's guidance is usually conservative, so Nvidia is clearly on its way to becoming a much larger business. So this result is not really a surprise. Companies from all over the world are in a race to build out their generative AI systems. Just a couple of weeks ago, the Financial Times reported huge orders from China, Saudi Arabia and the United Arab Emirates. No big company or country wants to be left behind. And so the one big question for investors is how long can this growth last? If companies are getting in their orders for Nvidia's chips now, those orders might start to slow down in a couple of years' time. Not every AI project or new startup is going to succeed, so there's a chance we're seeing a huge pull forward in demand that will eventually flatten out. If that happens, Nvidia's stock price will begin to reflect that slowing growth too, but that scenario is most likely many months away. For now, the momentum is firmly with the bulls, so I rate the stock a cautious buy. But these are my personal opinions, not financial advice, and I do hold some shares in Nvidia. For more detailed investing ideas, make sure to check out our website, overlookedalpha.com.